And that is precisely this micro mandates and the digital currency and the carbon credits and the social credit system is what the billionaires and center-billionaires trying to circumvent. They're not here, Andy, trying to make money. That's why they're buying gold, physical, regardless. They are just to try to preserve their living standards.
They now have to keep printing or we crash.
We've got this ticking time bomb.
Talking gold with the one and only Andrew Maguire.
Welcome to Live from the Vault.
Welcome to Live from the Vault, brought to you by Kinesis Money. And this is the show that goes beyond the headlines to uncover the truth about the gold and silver markets with world-renowned whistleblower and industry expert, Mr. Andrew Maguire. And this week, he'll be joined by our featured guest, Mr. John Lee of the Silver Elephant Minings Corp. And to learn more about John, we're going to leave a link right there below in the description. And today we're talking gold and silver, and you're not going to want to miss this conversation. So let's head over to the UK and join Andrew Maguire and our featured guest, John Lee. Over to you, Andrew.
Thanks, Shane. John, thank you so much for joining us again. It's been, I can't believe it. I just looked at it a little while ago. 2022? I mean,
it's almost definitely when gold is below 2000.
My goodness me. I mean, good. I mean, there couldn't be a better day to have you here or a better time to have you here. We've just done a big episode on our market updates on silver. I mean, it took most of the episode up. It's just mind-bogglingly interesting. So thank you for joining us today. And obviously, I'm in my first question, my very, very first question. And John, you do cover a lot of stuff. My goodness me, I couldn't believe that last time we were talking about everything from the World Economic Forum, you name it, we talked about it. But it's silver. It's the absolute breakout, the broken COMEX. What is an imbalance that we've never seen before, unprecedented. Tell us your thoughts of what you're seeing from your expert eyes.
Right, Andy, we're entering a once in a lifetime situation here with silver. When gold took out, I think last time we spoke about 3-4 years ago, gold was below 2000, and once it broke out 1800, I was expecting silver to take out more challenging $50 a couple of years ago. And it's taken a bit longer than anticipated. We can discuss the reasons why silver has been a lagger. But now we're looking at a situation where silver is primed to break out of that $50 cup and handle formation. As you know, and as well your audience is well aware, first time silver was at $50 was 1980, and gold was 800. And second time silver tried for $50 an ounce, it was 2011. And gold was barely 1,500. And now silver is trying for $50 for the third time. And as they say, third time is the charm. And we're primed to break out at that $50 level. And just quickly, the reason we can talk about technical trends and fundamentals. In terms of fundamentals, silver has been a laggard. Part of the reason was due to the Asia collapse of the real estate market and the housing market in 2011, struggling to come out of the COVID recovery. And now China has since readopted a reflationary policy. And so that sort of obstacle is removed from the equation. And second part of it was that, Andy, a lot of the silver bugs were waiting for gold to correct. And back in 2022, when gold took out 1800, I packed the gold target short term at 2800 in 2023. And it was the inverse cup and handle formation where the neckline was 2000 and the bottom of the cup was around 1200. So if you flip to the other side, then you add 800 to the neckline, and then gold logically was target of 2800. And Andy, gold went to 2800, but it didn't stop there for long. And then in a short while in 2024, took out 2800 and went to 3300. So I said, well, even on a loss scale, gold has exceeded the target. The loss scale, meaning that from 1200 to 2000, that was about a it's almost a double from the bottom. And so if you to double 1800, on the other side would be 3600. So I said, well, gold is probably going to be resting at 3300 to 3600 for the rest of 2025. And then it didn't take more than 6 months for gold to consolidate and break out of that $3,600 handle. And a month ago, I came out another program and said that if gold were to break out of 3,600 and then break out of 3,800, we'll be entering into that parabolic exponential phase. And now we're at 4,200. So gold is now in some element, and silver is playing catch up. As I said, right now, gold to silver ratio, even though silver is challenging $50, seems quite exciting, but gold to silver ratio right now is resting at 80. And historically, when silver peaks at a gold to silver ratio at around 30 to 50. So hard to imagine that even if gold to stay where it is at $4,000, it's entirely conceivable that silver could get to as high as $80 to $100 at the current $4,000 gold. But gold is not going to be staying here. I think the short-term target for gold is anybody's guess, but probably going to be challenging at around $6,000 an ounce. Andy?
That makes total sense. That jives with everything we're seeing ourselves and what our liquidity providers are seeing. And again, it's all about physical to paper balances. And I think, which is what cracks me up, what amuses me greatly is that while we see the Bloombergs and the mainstream media all over gold now. And in fact, Ray Dalio came on and said, "Oh, hey, 15% allocation." We're seeing a lot of the real money, the first tier bullion mags coming on and saying, "Hey, 20% allocation to gold." This is coming off a zero base, off a base where people have never been invested. Real money has never been invested before, and they don't look at the old moving averages, which you see people coming on saying, "Well, hang on, look how far above the 200-day moving average." It makes me laugh because what we're talking about is a paradigm shift from a 50-year paper market that is now evolved to a physically settled price. This is mind-boggling to me, and and it makes me laugh because then people say it's overbought, and as you say, people then wait for the pullback. And it doesn't happen. And you just explained one of the reasons why.
Right. Well, Andy, as you recall, I was actually a student of James Turk, and I actually worked for James Turk in early 2000. And I was quite involved in early days in the inception of GATA with Chris Powell and Bill Murphy. And
wonderful people.
How I see gold, I think gold has exceeded all my personal expectations. And it's doubled without much of a rest in the last 3 years. And they exceeded all the traditional ratios you can think of, gold to oil ratio, gold to silver ratio, gold to platinum ratio. And we can talk about the Dow theory and Dow to gold ratio right now is at 10. The reason, and it's not so much people losing confidence or faith of the dollar or fiat currency, but in my view, as I come on your program and other programs for the last 3 years, is that because of the micro mandate, because the imminent adaptation of the digital currency, central bank digital currency, and the social credit system and digital ID. And very soon, and it's rolling out in Europe. It's rolling out in the UK. It's been trialed in Australia. IMF has published a white paper about it. And Europe is going to be the next in line in 2027. UK and Australia will be first in 2026, followed by Canada sometime before 2028. And the rest of the world before 2030 agenda sets in. So what that means, Andy, is that your money becomes programmable by the cartels, by the manager, and that means that you will be mandated on what you can buy, when you can buy, and where you can buy. And there's been plenty of memes and shorts you can watch on videos. And married with the carbon credit and social credit system, if you were to, you'd be assigned a carbon credit of 1,000 kilos per year, and coincidentally, that is the amount of carbon you will consume for a trans-Pacific flight from Asia to New York. If you were to take that flight, that means you would be eating tofu for the rest of the year. And if you were to say something untoward on the internet or on a protest or on Facebook, you would be you could be you could be imposed a fine, of which the amount will be automatically deducted from your wallet. And if you do that 3 times, or if you jaywalk 3 times, you may be shut down. And there are already reportedly tens of thousands of people in China that are homeless, not because they don't want to work, not because they don't have savings, but because all of that is being taken away from them. So imagine it's almost like a Michelin restaurant or club. Even if you have money, you cannot go to the Mortons or with Chris or revisit your favorite holiday destination in Positano or in the safari in Cape Town in South Africa. This is quickly approaching to sort of the final chapter, which is the king and the peasants. The kings are the ones who actually with the printing machine, like Elon Musk said that he found 14. My hypothesis or my beliefs is probably there's a few more laying around. And then there's the peasants are being given the coupons, and which can expire if they don't use it. And that's why Andy, you're seeing equity markets is breaking out in all-time high in Asia, in Japan, in China, not in China, in Taiwan, in Korea, and in the US. So all these countries that are closely affiliated with the WEF these local equity markets are breaking out, and the real estate market are also very buoyant. There's a very clear decoupling of the economies from the equity markets. I was just in Japan. I was in Hong Kong. I was in China. I'm in Thailand right now. I was in Taiwan as well. The activities, economies are doing anemic. They're not moving, yet the equity markets are breaking all-time high. So that's clear. Again, it's clearly telling me that there are two sets of people. There's a set of people that are not playing by the rule, and they own one of these printing machines or two, and then the rest of the people are getting by, trying to make ends meet with the rising interest rates and rising and the tightening of the monetary aggregates. And overall. And that is precisely this micro mandates and the digital currency and the carbon credits and the social credit system is what the billionaires and center-billionaires trying to circumvent. They're not here, Andy, trying to make money. That's why they're buying gold physical, regardless. They are just to try to preserve their living standards. They're not blue. They're not red. They're not Republican nor Democrats. These are the Elon Musk, the Koch brothers, the Zeras, the Saudis, the family offices that are doing the planning. They're trying to get away from this digital system. And if you think that you can just borrow your grandma's wallet and call it a day, guess again, because the world's digital ID system is already fully integrated. For example, I'm a Taiwanese citizen, but I can show my face in the US without even showing a passport. And the system that scans your iris and your fingerprints is identical across the world. So the cartels and the manager or the power that be already have all your digital matrix and digital footprint. And it's inevitable what is coming down. And that's why I've been preaching, including my mom and everybody I can talk to or literally listen to me 3 years ago. I say buy gold at 1800 when it was 2022. And now, just in May of this year, I said buy silver at 35. You'd rather be buying silver at 36 in May of this year than to be buying silver at 34. And we can talk about the technical trends for silver. But this is not to do with inflation. This is not to do with financial crisis. This is not to do with war or interest rates or economies. None of that. It's all about digital mandate. And so, interestingly enough, I think that before this digital ID, this digital currency situation is reached a resolution, we're going to continue to see, parabolic trajectories. Started with gold, and now we're looking at silver.
And I think what you're talking about here is some people like yourself. There's a lot of smart people out there that have been preparing for this very day, and essentially, for example, in Liechtenstein. At a friend's vault there, and essentially in there's from floor to ceiling of silver, but it's not silver, it's not standard bars. They're singular coins, and so these are just blank coins, silver coins, an ounce each, floor to ceiling. And we say, I made the mistake of saying, well, what are you doing? I can get a better price. He said, yeah, but when it all breaks down, each of these coins will be my freedom. And this is the truth.
Exactly. It's not measuring dollars or euros. It's about cutting away from the SWIFT system, from the fiat system. It's shocker, Andy. The first chapter was COVID, and that was the first experiment in the cartels or the power that be in seeing how far they can push people, right? And so that you're able to be locked up on your own device for weeks and months at a time. And now they're experimenting on UK and in Australia on how far they can push on this digital ID and digital currency. Um, and it's all well sort of advertised and then memed as well, Andy, that in UK last year, 13,000 people got arrested for saying something or waving a placard or writing something or participating in a group discussion online. And this is like 14 times more than how many Russians were arrested. And there are 4 times many Russians as there are in the UK. And so, and guess what? Once digital ID is implemented with your digital wallet, they don't even need to show your front door. You will just be like a matrix, right? You'll just be unplugged. It's a very delicate and dire. It's a very interesting times we're living, Andy, to say the least.
Well, that's true but there again, we need solutions, and I think what you're pointing out is very true. It's happening, and even if they fail to get digital ID, for example, in the UK by the next Parliament, they already have all of the pieces in, as you say, they've got your iris, they've got they've got your data from various parts, and AI will just click it all together. And essentially, they've got it anyway. So essentially, in fact, I saw something, very smart guy out there saying, they're kind of pissed off with Keir Starmer here, the president, the prime minister here, for raising attention to it, because really it was happening anyway. And it's almost like now you've got everyone up in arms against it because they don't want it. You're going to impose on us. So they were almost like, back off, because we've got it in hand anyway. Digital ID is everywhere. So it's just and AI will connect it all.
Well, Andy, it's unfortunate. I went to high school in the UK. It's such a wonderful country. I'm somewhat pay gratitude towards for my education. But how could a country like England have illegal immigration problem? Like, it's an island, for goodness sake. And so thousands of Africans and elsewhere being boated over there. So obviously it's being programmed. And that's if I may talk briefly about silver target. Silver broke out of $35 handle in May of 2025, 4 months ago. So at that time, we see I see a clear rotation from gold to silver when participants realize those that are waiting for gold to correct to get an entry point to silver, they realize that gold's never going to go back below 3,000. And that's why you see that allocation of silver from gold. So since May of this year in 2025, there are days where dollar was rallying and gold was correcting and silver was up. So every time gold takes out $35, it went to $50 in a hurry. I was forecasting silver to challenging $50 in the summer, but it took a little while longer because summertime, the cartels are able to manage the silver prices better. But now with the silver imminently breaking out 50, already has done that. Then it's breaking out of that 5-decade neckline of $50 that was first established in 1980. It's truly exciting. And my short-term target for silver before March, or certainly before September of next year, is $85. And the way you reach that target, technical trade still just does play a factor. Is that if you look at the neckline of $50 silver, that was first reached in 1980, and second time visited in 2011, and now we're seeing that again. The bottom of the cup is in the near term cup. It was $12 I'm seeing right now in 2014, 2015, and then 2021 again in COVID. So So $12 to the $50 necklines, that's a $37 gap. So on a linear scale, if we add the $37 to the $50 neckline, you can reach the target of $85. But if you want to go aggressive and chart it longitudinally on the log scale, from $12 to $50 is a 3x. It's almost a 4x. So you can make a case that once the neckline's challenge is broken at $50, silver can conceivably triple to $150. Even at $150, it's not too crazy. As I said, even at $50 at a $5,000 gold, the gold to silver ratio is around 40, which is historical bottom at the peak for silver. And then if you look at in terms of investment demand for silver annually at 300 million ounces. So at a $50 silver right now, 300 million ounces, $15 billion. So even if you add a zero to that at $500 silver, the investment sort of void to be filled will be around $500 billion. It's still very manageable. So Andy, it's entirely possible. Hell, crypto could be trading 100,000. When James Turk and I mused about some investor moved from gold money to Bitcoin, I remember that was $5 a coin, and now it's trading 100,000. So as I said one more time, this is not to do with economy. This is not to do with money supply or interest rates. The dollar is rallying, but gold and silver continue to go up. So now it just until there's a resolution on the outcome of this digital currency is either a retreat, of which there may be a top in place for the metals, or if there's a continued rollout, then you're gonna see continued uprise for gold, and nobody has any idea where gold is. And allow me to share one of my thought on where gold might be. You and I, you're obviously senior than me. I'm 51 years old. I was born in 1974, but I was told the gold window was severed in 1971, 1972 by Nixon. Gold was $35 an ounce, and it took gold 10 years from 35 to 800. So that's about a 25x. If you think about this bull market rally, this new bull market, it really started when Gordon Brown dropped that last batch of gold at $250 in year 2000. So if we were to peg gold's bottom at 250, and then you multiply by 25x, as it did from 1970 to 1980, you're gonna reach a target around 5,500 to 6,000. And so there's not a gold window to be broken per se, but there is being a very implicit management of gold throughout the times from year 2000 to where we are today, and to now the dam is broken, all the technical resistance being broken. So now they can only manage the best, try to manage and hope for the best. So I mean, certainly it's easier for gold to go from 4,000 now to 6,000. That's only a 50% gain from here versus 1,800 to 4,000, which is achieved in a short order in the last 3 years. So it's entirely conceivable. We could be looking at $6,000 gold and $85 to $150 silver in the next 6 to 12 months. Andy, you talked about the UK Prime Minister. Unfortunately, having traveled the world over 40 countries since I was a child, my father was diplomat for Taiwan. Look at Fidel Castro, right, of Cuba, and look at Hugo Chavez of Venezuela. You can protest all you want. You can shout on top of your lung. Unfortunately, it's coming down. It's not the call of the prime minister. It's not the call of the parliament members. I think it's too far gone, the train, that it would be hard to reverse. So, if you happen to have some discretionary capital, find a plan B and exit strategy. If you're Australian and British, the show is going to go on, and I don't think it's going to be pretty. Andy?
Yeah, absolutely. And I think through all of these things, when people look and they hear, okay, now I'm getting information, and John, we're getting information, expert information that you won't get anywhere else necessarily. It's coming from it's true. Now, What do I do with it? And I think this is the key. This is why we have these episodes and bring the experts like yourself along. And it distills down to, okay, yeah, I believe this. I know it. He's absolutely right, or we're absolutely right on this. What do I do about it? What can I do for myself, my family, and those around me? So obviously it brings us back to silver and gold, physical silver and gold in our possession, not in the hands of anyone else. That is going to provide us some degree of independence in this, as you say, this social credit system where, as I say, I might go to the supermarket and no, you've had enough meat for the month. It just won't go through, or whatever you say, or all these other reasons you've given.
Curfew.
And it's like,
we got to raise our we have to raise our productivity. Everybody's got to go to bed by 11 o'clock. Guess what? Your wallet will not be working after 11. This is not a joke, Andy. It's happening. And besides buying gold and silver, unfortunately, some people have to wait for the breakdown in order to realize and try to break through, and it may be too late. The warning signs are on the wall. I mean, there are plenty of countries like in Asia, in Malaysia, in Thailand offering digital nomad visas with very little or no money down. And the international travel is going to be increasingly difficult. They're going to start levying exit taxes, passport controls. They're going to make your passport difficult to get. It's going to make they're going to wreaking havocs on you. It's time to start looking for a plan B, especially you're in these affirmation countries. It's unfortunate, but there's always a way out. There's still time, Andy.
And this is why these sessions are important. And now, the other thing that really gets my attention is that we look at silver. We're talking about silver. We're talking about silver breaking 50 in dollar terms. But yet, as you know, as you absolutely know, silver in every other currency has soared higher. I mean, we've got $53 silver in spot silver. And that's a global price. And yet we've seen up to $3, up to $15,000 spreads between a capped, backwardated situation, US market, and I think part of the problem is that I think open interest, i.e. the number of chips issued in this siloed casino that is not really related to anything real, is so contracted now. The real money's gone. It doesn't want to deal with the COMEX. The real money is dealing with physical exchanges where they can get physical assured and deposited. And some of that's actually, as you know, even being sourced, moving over to China and places like that. So it's interesting to me that we still, many of us, and we have to, all our charts show the dollar price of silver, but the real price of silver has escaped. It's gone.
Andy, you're right. Remember the days maybe 15 years ago when oil was 120 and Australian dollar and Canadian dollar was trading at a premium to US dollar. Now, all these fiat currencies are subordinated to the dollar. All of them look the same. The euro, the pound, the Aussie dollar, the Canadian dollar, these are all controlled by the manager, by the boss, by the power that be. And they have the printing machine, and these machines are indistinguishable. And also that there is a clear collusion between the power that be and the large enterprises, the Walmarts, the Amazons, the Apples. I mean, even if you're, for example, for God's sake, oil is $58. There's no reason for inflation and for the cost rising the way it has. Like, I was in Mongolia, the cost of a steak dinner is triple. It doubled in the last 5 years and tripled in the last 10 years. It's doubled in the last 5 years, especially. I'm scratching my head. I'm like, well, there's 10 million kettles, right? There's 3 million Mongolians. Why would I mean, the cost of growing a cow is still the same, which is negligible. I mean, there's vast amount of land. So why are the prices so high? So, I mean, there is a collusion, clearly, of the industries with the central banks and with the governments to deliberately jack up the prices and hollow out the middle class. So So Andy, this is the situation we're in. And another thing I want to talk about is you have to, I would urge your audience to stop accumulating the physicals. What you see in your bank account is a fiat of which they can turn off at a whim. You don't want to wait until say, you know what, I transact digitally anyway, so digital currency is the same. No, it's not. The difference is this new digital currency become programmable. First of all, you cannot take money out of the bank. Like in Australia, if you try to take $1,000 out of the bank, you have to fill out the form. You have to wait for approval. And then secondly, you will not be able to go to kitco.com or your gold jewelry shop to buy gold and silver. You'll be cut off on that. And the way the government is going to curtail you from further gold and silver purchases, of course, they're not going to outright cut off right now or stop you from buying gold and silver. So they would do it, Andy, is they would just throttle the supply to the mints. Andy, the mints would just run out of silver and gold, and the gold and silver produced. You'll be surprised to hear that most of the gold smelters in Switzerland. So once the gold is minted and smelted, it will go directly to the coffers of the power that be. That is the infrastructure that we're dealing with, and it's essential that everybody go out there and start buying gold, especially silver coins and silver rounds. The opportunity might not last long.
That makes a great deal of sense. And I think so. This is something we're taking away from here. This is an action point of that, because we all have to ultimately, John, we have to take responsibility for ourselves, each and every one of us, for ourselves and our family. And I think these are action points. And I think that's always what we kind of come back to. Yes, what do I do? And you've just outlined something that can be done. And yes, none of us know how long this is going to happen. This is all going to come downhill on. And yes, there'll be some pushbacks. I really wish that in this country, we're just so apathetic. I mean, you think we'd be up protesting in the streets. You'd think there'd be like marching on Parliament. Of course, it's not happening. It might happen in some other parts in the world, but it's not happening here. So you have to do something. And as you say, these are things we can do, and it's available. I mean, I can go anywhere and buy a silver coin right now. I mean, it's available. It's on bullion by post. It's anywhere. So, and obviously now, John, you are obviously in the mining business, and this is what is really interesting to me. So from that perspective, now you have silver in the ground. You have, are you keeping as much of that silver in the ground as possible? What are you actually professing?
Yes, well, Andy, I'm a CEO of two mining companies. One is a silver company called Silver Elephant, with a project in Bolivia that's in production, and the symbol for that is ELEF. The share price has more than doubled in the last few months, but still represents an interesting investment opportunity with a lot of silver in the ground, for those who can stomach a bit of a political risk. It's essential, Andy, for mining investors to diversify their mining portfolio, because there's geopolitical risk, there's a social community risk, and then there is also exploration risk and mining production risk. So it's always wise not to put all the eggs in one basket. And certainly silver miners, given the optionality of the silver ounces in the ground, does provide that leverage. So, but I wouldn't bet the farm in silver mining companies for vis-a-vis silver. So personally, I have about half of my liquid worth in real estate and in metals, and then the others in Silver Elephant shares, and then in the other mining company of which I'm the CEO, and that is Cleantech Vanadium Mining Corp. And Andy, allow me just to share a bit with the audience about the other observation that I made. As you know, Donald Trump and this current administration is making a lot of noise about being resource independent and being independent from so the Africans and the China who supply a lot of the trace and strategic and critical minerals. So what's happened, Andy, is if you look at the periodic table, a few of these elements is found new using life because of the high tech. And so elements like rare earth and germanium, gallium, and also fluorspar of vanadium, of which clean tech is exploring for in the United States. These elements, the United States does not produce any of these metals and elements, but they are yet critical to powering your EV vehicles, to enrich uranium, to produce magnets, rockets, spaceships, even to the day-to-day of plastics, for example, Teflon, refrigerant. And so all these elements require critical minerals. And in the case of fluorine, of which clean tech vanadium is exploring in Kentucky, and the share price for clean tech has gone up 5 times in the last 2 months, but the market cap of that is still at around $50 million. The company is actively talking to the U.S. government to expedite the production of these projects in the United States. So I think that if eventually a sort of arrangement could be reached from the U.S. government in terms of financing and offtake, there's still a lot of upside for clean tech to go. And the symbol for that is CTV, Charlie Television, and Victor. And for Silver Elephant, the symbol is ELEF.
Is that Vancouver?
Yes, on the Toronto Stock Exchange.
Oh, okay. Okay. So these are things that people should start to think about, because, equities, general equities, how do you rally them? I mean, but these are things that are needed for infrastructure. Now, you talked about critical minerals, metals, etc., etc. Silver is is needed for military purposes too, and and also for the big AI build. So the word I've been hearing, and you would be better known, be better on the ground in America than me, is that there's going to be export controls on silver. We're sort of expecting them. Is that something you've been hearing rumors of?
Right. Certainly, there's a premium being placed on mineral mining companies in the United States. And clearly, if you look at the silver producers, the ones focused in US has started to outperform the ones focused elsewhere. So the likes of Hecla and Core is starting to doing better than the likes of mining producers in Mexico. So certainly, especially for North American investors, I will focus portfolio majority of your mining portfolio in the United States. Also, keep in mind that the law and order has somewhat broken down, and nowadays the enforcement and the policeman is absent, and so therefore, if there happens to be a major discovery in Africa, and there's a lot of issues and nationalization discussion in West Africa, as well as in Central America. So definitely, Andy, there's a premium being placed on projects that are based in US, and I would recommend your audience to pay more emphasis for projects that are based in, that are US centric.
And essentially, if that's the case as well, essentially that's tightening global supply, which ultimately raises the dollar price. And I know you don't think of silver as in dollars. I remember last time you said, I don't think of silver in dollars. It's a store of wealth. And I think, so I think people need to remember that too.
Well, one point you raised about this tariff, I want to talk about this, is that the definition or the utility of a currency is the liquidity, right? The fluidity, the ability to transact cross border. So when you start erecting tariffs and barriers and quotas, and that's just going to diminish the appeal for the dollar. And then not to mention that with the digital currency, people don't like to be dictated or running in fear of their wallet disappear on them the next day. So that just increased the appeal for gold and silver, which has been money for centuries. The issue on the tariff is serious because there are already some tariff in place for in certain elements of copper in finished products, in finished vanadium product, that there is upwards of 50% tariff. So what that means is United States could be experiencing more inflationary pressure in that some of the basic materials, building blocks of things that you consume, you use or you eat or you use could carry the 50% higher price tag for manufacture and to be imported in the U.S. So we're entering this completely uncharted waters and territories. nobody really has the crystal ball on how it's all going to pan out. And what you're seeing is also not like, and it's not like a call from like a authoritative figure, like one person. It's a collectively loosely coupled powers that are running their agenda. And as I said, given there's no policeman anymore in this world order, in this new world order, everybody is just who has the bigger gun that are calling the shots. And it's truly a very interesting situation. We just have to wait and see. Find a good shelter. Make sure you stack up on your supply and food. Have some coins. If you have a farm, grow some plants, and watch the movie, watch the show, but guard the exit closely.
So very true. And I think what's interesting that I'm looking at the moment is it's pretty clear. I mean, the reason we had such a big basis spread between the US and local London is because there's no, the cupboard was bare. The cupboard was absolutely bare. And the four member banks, the cartel that we've already looked at, and we know these guys, LPMCL, that was formed in April, the 1st of April, 2021. And ever since then, these guys have had the privilege of settling maybe up to 800 tons of gold a day amongst the books, with only about 3 to 5 tons ever appearing at a fix. Silver, and while Basel III recategorized gold as a first-tier high-quality liquid asset, so it had to be physically deliverable at the fixes, silver didn't. And it's like they carried on, and they've been caught. To me, they've been caught with a massive hole. And so now when they got called for it, they didn't have it. So yes, they're trying to ship back what they can, but whatever they ship back is already demanded. It's just filling another hole. So I see that they're going to have to go out and buy this back at market at a higher price or default. Well, they can't default.
Majority, when I studied the LBMA and the physical trade in London, which is really indistinguishable from the paper trade on the COMEX. All the physical trade, 90% of it's just robbing Peter to pay Paul amongst the members that don't go directly into the coffers of the cartels into Switzerland. So there is no real physical buyer through LBMA, through London Stock Exchange, and then through the COMEX. This is all a game of paper money to try to manage the price as low as possible, so the cartels can load up the physicals, their back end, that go directly into their coffers in Switzerland. But now the game is being called out. Like I said, these banks are trading papers amongst themselves with almost no physical volume. It's just a members only club. And now I think the scheme is being called to roost. And so people are going to realize that there is not actually a central clearing system for physicals, and that all these banks, they don't have any physical silver of quantity to speak of. All of that is spoken for, Andy. So the emperor has been called, and they have no clothes. So there's really, honestly, Andy, there's not a global settling mechanism for silver physicals that can do more than 100, 200 million ounces of trade. And that's a drop in the bucket. I think as people realize that, then the scramble for physical silver is going to set in. And they're going to find all avenues possible to get hold of that silver physical. All the volume you see on the COMEX and the LBMA, the 100 million ounces a day of trading, right? Like a billion ounces, 50,000, 100,000 contracts at 5,000 ounces, like 100 million ounces silver contracts trading a day, a billion ounces a week. All this is a phantom, Andy. All this is phantom. And when the real players start setting in, putting up $100 million, $500 million for physical silver, as they're doing right now, this is the game coming to roost. And that's why I believe that you're going to see $85 silver, you're going to see $100 silver. But yeah, there's not physical to be settled, even at this price tag. The price has to keep going up to that we are truly entering into a price discovery on who is going to part with their silver at what price. I think it's going to take a triple-digit silver price to see a clearing and real physical volume changing hands.
Absolutely, and I think the irony of it is, and the reason they've been caught out is that while they've had a footprint in the COMEX in the local London markets, while as you say it's all been a sham. In fact, the when you look at the COT reports, and I deal with the commission from time to time, and essentially what they're doing is they're saying, "Hey, look, we're short X amount of gold or silver on the COMEX, but it's hedged in London. Look, it's hedged." And yet, what they're not saying, it's hedged with unallocated paper, paper to paper.
All the CTFT reports are fake. I've been talking about it for 3 years. I mean, you're seeing, like, if I watch the futures market carefully, you can see 10, 20,000 contracts short on a daily basis. And yet, at the end of the week, you will see the CFTC report come out on commercial short position for silver went up from negative 50,000 to 70,000. I'm like, that is a joke, Andy. So what's happened there is you can easily create two commercial shorts, one long and one short. And so that balances out behind the scenes. It never gets published. All that CFTC report is for the high schoolers to consume. It's all fake. I can't think of a better word, Andy. It's a fake report. That's what it is.
So I think people are now what they're really hearing from this episode is that, look, really, it's a wealth. This is we're talking about wealth protection here. Making a very serious move to protect your wealth. You know, what's the point? What's the point of filling a bucket that's got a hole in it? You need to find a proper instrument: silver, gold, physical silver. Now, how can people get in touch with you, John? It's really important that they can. People will want to get in touch, and especially as you've talked about a couple of projects that you are very, very involved in, that you've named a couple of the ticker codes there. But people can get resources from you and advice from you. So how can people get a hold of you? We're obviously going to put links in, but you're obviously, how can people get a hold?
Yeah, I mean, Andy, I am an avid traveler and student of history. I have over 25 years of experience in mining. And I'm 51 years old, so I have learned quite a bit from experts like yourself and James Turk in the silver and gold community. When we talk about preserving living standards, what I mean by that is, Andy, it's not about making more money so you can upgrade your diet from a burger to a steak. Okay, it's not like upgrading your taste or your living standards from say Johnny Walker red label to a blue label. It's about being able to buy a steak or a burger at all with this digital currency. So hopefully that lends some essence to the idea that buying silver today is not about making money in dollar terms. You can get hold of me, Andy, through just look me up Twitter, John Lee Silver Elephant. You can see some of my calls on gold at 1800 and back in 2022, and also a strong call to buy silver at $36 in June of this year, 4 months ago. And you can also look me up, Silver Elephant. The ticker symbol is ELEF, and Clean Tech CTV, and the ticker symbol is CTV.
Well, that's brilliant. And I do honestly recommend people do that. And I think people should also listen back once more to this, because we talked about some very important things here. And we need to be on our toes now. It's not a time to sit back. It's a time to take action. And I read this as an action episode. Why would you not, after you've watched this, go out and exchange some of your depreciating rubbish, dollars, pounds, euros, yen, whatever it might be, just exchange whatever you can afford of them into something that cannot be ultimately corralled into a digital currency, which will then be taken, and you'll have negative interest rates. It'll cost you money to even have a deposit. You need to make the move now.
My personal favorite is silver maple and Canadian gold maple. They are beautiful, and they're $9.99 instead of American Eagle. That's $9.95. They are an art to be appreciated. So go out there. Probably it's gonna cost you $65 an ounce to buy a Canadian maple silver, but grab them while you can. They're beautiful to look at. You will not regret it.
Beautiful. Well, look, that's a nice place to end. And John, thank you so much for parachuting in on this very important time. I hope people take note here, and I look forward to having you back again. And I think maybe what we should do is, if it's all right with you, just come back at the beginning of the year of 2026. I totally get your price. In fact, we were looking at 140 silver from everything we could assess. You're talking about 85 to 150. I mean, we have to be in the right ballpark there. I can see it happening. And once the short squeeze happens, well, I mean, silver doesn't behave itself, does it?
One other important thing about silver physical is you don't want to rely on the COMEX market. There's already a precedence in nickel trade where the London Metals Exchange rolled back the nickel trade. They will hold the nickel price at $50 a pound. They halted that and then reset at closing at $15 or $35. So it is entirely conceivable they can hold. They can rob you of your paper gain from the COMEX futures trade by arbitrarily holding the trade and arbitrarily resetting the closing price, settling price. So you don't want to be getting too cute, Andy. Get some physicals wherever you can. It feels like Christmas. Establish your position, buy your coins and bullions, stay put, and it's gonna be feeling like Christmas every day until early 2026. And I look forward to revisit and readjourn with you and to reminisce this conversation we just had.
I look forward to it, John, in the new year. Looking very much forward to it.
All right, thanks for joining us on this episode of Live from the Vault, brought to you by Kinesis Money, and a huge thank you to Andrew Maguire and our featured guest, John Lee, for cutting through the noise and sharing insights that you just won't find anywhere else. Now, if you like this episode, make sure you subscribe and turn on the notifications so you never miss out on this information. And don't forget also to share this episode with someone who really needs to hear the real story behind the headlines. And we're back soon with more hard-hitting truths from inside the precious metal space. And until then, thanks for watching, and we'll see you next time right here on Live from the Vault. Bye for now.